Hi, my name is Peter Tersteeg, and today I'm going to be talking to you about the First Homeowners Grant in Victoria. I'll be covering what the First Homeowners Grant in Victoria entails as of October 14, 2008. I'll also be discussing how a young couple can afford to buy a house worth around $300,000 even if they're only on $35,000 to $40,000 each. So let's get started.
In the state of Victoria, the First Homeowners Grant can be calculated using one of two methods depending on how you're purchasing the property. If you're purchasing an established house, that's a house that has been lived in before, you'll get $14,000 from the federal government. You'll also get slightly lower stamp duty as a first home buyer, and the Victorian government will give you $3,000. It comes to a total of $17,000 in federal government grants and about another $1,000 in stamp duty benefits on many houses. If you're buying a new house, that is, a house that's being purchased off the plan or one that you are the first owner of, the federal government will give you $21,000. Again, there's a slightly lower stamp duty, but in many cases the stamp duty is only paid on the land cost, not on the full value of the house and the land. So that can be quite a saving. The state government also gives you $5,000 plus, in many cases, a regional state government grant of an additional $3,000. So if you're buying in say metropolitan Melbourne, you'll get around $26,000 in first homeowners grants, or if you're buying in a regional area, $29,000. So in terms of actually buying a house, what does this really mean? Well, we're going to use an example of purchasing a property worth $300,000 for this presentation. Now, you can borrow up to $300,000 or 100% of the purchase price. There are several lenders who are still able to do this. The chart in front of you shows you roughly what the costs are. You'll have fees for the lender, there is mortgage insurance fees, costs for conveyancing and solicitors and other sundries, as well as the big dreaded one, the stamp duty. If you're buying an existing house worth $300,000, you can see that your costs will come to a little bit over $27,000. Now keep in mind, in this situation, the First Homeowners Grant comes to a total of $17,000 because you're getting $14,000 from the federal government and $3,000 from the state government. So in all, you'll need about $10,000 of your own money to be able to purchase this house. Now this money can be money you've saved, or it can be gifted from family and friends. There are multiple ways in which banks are happy to look at this, but essentially to buy a house worth $300,000, at a minimum you'll need around $10,000 as your deposit. If it's a new house, and let's consider that the house is worth a total of $300,000 again, but the land that you buy is worth $100,000, and then you take another $200,000 to build the actual house. In this case, you've got essentially the same fees. Now the lender's fees might be a bit higher because the cost of construction does cost the lender a little bit more money. Mortgage insurance and many other costs are the same, but in this case you're paying stamp duty only on the land, as I mentioned in the previous slide. So stamp duty is about $2,600. As a result, you're paying substantially less, and your total costs are a little bit over $18,000. On top of this, the government grants are much higher. In metro areas, $26,000. What this means to you, the buyer, is that the First Homeowners Grant will actually cover all of your purchase costs to move into the house. In fact, you'll probably get around $8,000 back from the government, and this can be used towards your first repayments, or if you need to buy some extra furniture and that sort of thing to set yourself up, you can use it for that. Now let's take a look at how affordable it really is for a young couple to buy a house. Now in this example, we're going to use John and Jane Smith. John's income, if you look at the green section, is $40,000 and Jane's income is $35,000. Now if we take into account the amount of tax they pay annually, and the amount of Medicare levies and so on, they'll actually go home every month in their pocket with $5,281. The next thing banks look at is the monthly outgoings. Now the first thing of course they're going to look at is how much the loan is and what that's going to cost them. Now in the current market, interest rates are actually around about 7%, but banks do look at a premium on the actual interest rate. So they're going to actually calculate your repayments on around 8.5%. As a result, the monthly repayments that the bank will use to calculate the cost of owning the property is around $2,313. Now let's assume both John and Jane have a $5,000 credit card each. The banks do actually take the cost of a credit card into account, even if you don't owe any money on it. And then of course, we still need to eat, get the electricity on and that sort of thing. And banks will budget around $1,800 a month for John and Jane just to live. What this means is their total monthly expenses is around $4,363. So, very simple math here says that if we take the monthly income of a bit over $5,000, take away the monthly outgoings of $4,363, we'll be left with $918. Therefore, the banks will lend $300,000 to this couple because at the end of the day, the very simple mathematics shows that they can afford to buy this house and they can afford the loan that the bank will give them. So let's sum everything up. The first homeowner's grant will provide most of the deposit, and in many cases, such as when you're building the house, it'll not only provide all of the deposit you need, but it'll also give you some money back. Secondly, dropping interest rates in the market we're in now have made home loans affordable as they have been in many, many years, and we've actually shown you how a couple earning around $35,000 to $40,000 per person can easily afford a house of $300,000. So what does this mean? Well, the examples we've used here are all very generic and may not suit your circumstances. If you'd like to know more and learn specifically what you can do, why not give us a call? Our number is 1300 880 225. Thanks for your time. We look forward to hearing from you soon.